Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Karl Thiel and Keith Speights giving a 1 to 10 rating to liquid biopsy company Guardant Health, ticker symbol GH. First, we'll rate the strength of Guardant's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Karl's got a 6.5. Keith, you're at a 7.
Yeah, I like Guardant Health's business overall. The company is a leader in liquid biopsy technology, has several products on the market, including its flagship product, Guardant 360. That's a blood test that can detect multiple types of cancer. Guardant Health does face some competition, though. It has rivals, including Exact Sciences and Grail. And so I can't give the company a higher score just because of the possibility of competitors beating it in some areas.
Yeah, I do like this company a lot. A lot right now is riding on their Shield test, which is pretty newly introduced. It's a colorectal cancer blood test. And, doctors have long been frustrated by how hard it is to get people screened for colorectal cancer, which is incredibly important because if you get screened early, you can, cure early disease often. But if not, it becomes a very, very bad outcome. So get your colonoscopies, do this test, do something. There's only 1/4 of sales so far to look at. So it's really, it's hard to say if it'll ramp up to its potential, but there's a lot of promise there. It's not as accurate as a colonoscopy. It's not even as accurate as the competitive stool-based test Cologuard from Exact Sciences. But they have, they're looking at pretty strong reimbursement for it. They've just got ADLT approval, which will improve that. And, in the meantime, their 360 test and their Reveal minimal residual disease testing test are both really important, but that's a more competitive area.
Let's talk management. A 10 is Warren Buffett. A 1 is Homer Simpson. Karl's at a 7. Keith, you're also at a 7.
Yeah, I do like that Guardant Health is founder-led. Helmy Eltoukhy and Amar Ali Talasaz, I'm probably butchering their names, but they founded the company in 2012, and they both serve as co-CEOs. Now, I would normally be leery of a co-CEO arrangement, but it seemed to work fairly well for Guardant. So I give management a 7. They've made some good decisions related to product development. The stock has performed quite well over the last 12 months, and largely as a result of management's decisions.
Yep, I'm right with Keith here. That they haven't gotten to profitability yet. That's obviously going to be important. They have at least improved their cash burn situation, and should continue to do so from here on out. Depending again a lot on how Shield ramps. But this is a hard business, and they have achieved a lot. So I do give them a good deal of credit.
For financials, a 10 is a fortress. A 1 is yikes. Karl's at a 5. Keith, you're at a 6.
Right. Guardant Health has solid revenue growth. That's the really good news for the company. Revenue jumped 30% year over year in Q4. The bad news is it is still losing money, and revenue growth will probably slow somewhat in 2025. Management's guidance is for revenue to increase by around 20%, which is slower than the 30% they saw in Q4. That's excluding non-recurring revenue that was recorded last year. But there's more good news. The company's bottom line continues to improve. That trend could continue. They're expecting a reduction in cost of goods sold with the Shield colorectal cancer screening test and the Reveal minimal residual disease test for colorectal cancer in this year. So the company also has a hefty cash stockpile. So there's a lot of good. There's some bad. So overall, I think a 6 is in that ballpark is probably about right.
Yeah, and that's reasonable. I put them a tiny bit lower, because they've got good cash, but they've had to take on debt, and they still are burning quite a bit of cash, and they're going to do so probably out till maybe 2028. So that's a while. I think they're going to be fine. Obviously, they have enough commercial promise that they're going to be able to get the money they need, but it's just not the best environment right now for a company in this space to be raising cash. So that's why I was a little bit low.
Karl, let's talk valuation. How well will Guardant stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, so they have, they're a little under 7 times sales right now. They're not profitable. So, I mean, the company isn't cheap, but they are a leader in liquid biopsy. And so, and just to be clear, that's looking for tiny bits, tiny fragments of DNA that circulate in the bloodstream that can shed off of tumors or other things. It's often used in maternal testing, things like that. Liquid biopsy is going to be increasingly important. So, I mean, they're kind of a leader in a very good space. So I'm going to say 10 to 15%. I gave them a safety score of 4.5, which is, that's maybe a little low, but that's where I landed just because Shield is so new. And, they are certainly seeing some fierce competition from companies like Natera is certainly one that comes to mind.
Yeah, I agree with Karl that annual growth of between 10% to 15% over the next 5 years is quite possible, especially as Shield picks up momentum in the marketplace, which I do expect will happen. But as we've been talking about, we live in volatile times. This growth definitely isn't a sure thing. I'll give a safety score of 6, a little higher than Karl's, but still, this kind of growth, double-digit growth, is not something you can take for granted.
Top of time, Karl. Is there a company in Guardant space you like more?
Well, you caught me in a risk-averse mood. I guess I'm like Keith. I'm getting more cautious as I get older. So I'm going to put Roche out here. Now, Roche obviously is a huge, very diverse company. I think that's a good thing. They are a leader in, people often think about their drug business. They own the former Genentech, for instance. But they are a huge global leader in diagnostics, and they among the companies they have, one is Foundation Medicine. So they play in the liquid biopsy space, and they have a sort of a $14 billion annual diagnostic business. So you can get them at a reasonable valuation and a dividend to boot. So I do kind of like them.
I actually like Karl's pick of Roche as well. Now, I think in its space, Guardant Health is the best company. I will note that another company that Karl mentioned earlier, Natera, ticker there's NTRA, is growing revenue faster than Guardant Health. But if I had to pick between those two, I'd still go with Guardant Health. But I totally agree with Karl about some of the pluses for going with a more stable company like Roche.
Thanks to both Keith and to Karl. They've given Guardant Health a overall score of 6.4 out of 10. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Cisco Systems. Till then, Fool on.
I just noticed that Anand looks like Mickey Mouse with the...
Oh, so thanks.